expansion prematurely is a joke, in my opinion. And now, actually, what I'm looking at, everyone is deprioritizing Egypt. Even some Egyptian fintechs are deprioritizing Egypt, which is ridiculous to me. And it's less competitive. Yeah. So they're actually making it easier for us, and it's fine. Yeah.
How do you live with that pressure?
We ignore it.
Okay.
In an ideal world, I wouldn't even be doing a podcast, right? Everyone is just trying to justify an internal belief that they have. And at the end of the day, you can go faster than what you need to do. The first thing for us is you don't give anything for free.
Okay.
You don't do offers, you don't do random discount. Because if the customers don't see value in the product, then you won't sell. It's easy for me to give you the solution for free for 6 months, for a year. You'll never know if it's actually solving a pain point for them.
Hello, Internet, and welcome to episode 7 of the RCP podcast. My name is Kyane, and I'm a partner at RCP. Today's guest is Jacques Marco, who's the founder and CEO of AxisPay. Having raised the monster $8 million seed round, the company is today one of the fastest growing fintechs in Egypt. Jacques is a unique type of founder in many ways and loves to operate under the radar. If it wasn't for our friendship, he would have never appeared on a podcast. This conversation was recorded last year when the company's first product went live, giving you a sneak peek on Jacques' mindset and unique take on the Egyptian market. Without further ado, let's get into the conversation. Jacques, thanks for doing this.
Of course.
Thanks for having me in your office. Anyone who knows me personally knows that I just can't stop speaking about you and Axis. We have a special story and connection. Hayden and I, when we spoke to you the first time, it was for your previous company, RCP, that you were building. You ended up selling that one, and now you're at it again. Thank you for letting us be early in the journey. When we speak about you to other investors or founders, I always come back to his dad is a lawyer, and he's not scared of spending hours reading boring central bank documents in Arabic and sending me PDFs and telling me, look at page 15 here. Do you think that had an effect on what kind of entrepreneur you are, the fact that your dad is a lawyer?
Growing up, it was a discovery. I didn't know necessarily what I wanted to study. I started to study law, and then I took a gap year before studying econ and politics at undergrad. Then I just ended up coming back to Egypt, going into banking, but then I discovered payments at the time, not even fintech. And that's how I started. I like to study, I did teaching, so for me, reading and discovering docs was a simple thing.
As a result of that, whenever Hayden or myself, we send you pitch decks of some companies in Egypt, you're like, okay, this cannot work. This is just not legal. The regulatory sandbox is not live yet. You seem to have a grasp on regulations in Egypt that surprisingly a lot of founders don't. What do you think we should do better for keeping innovation and regulations coming together?
It's tough just because as a founder, you're asked to go and discover things quickly. You don't have all the info. Not all of the information is really widely and readily available. And I learned this the hard way. Right? I spent from 2017 to 2019 trying to figure out what kind of regulations we had to do in a company that wasn't a venture-backed company. It takes time to build any payments-related businesses, especially in a market where still education around digital savviness and product adaptability is quite low.
So you were CFO at Kyane, and then you built RCD, and then you had an exit, and then you start again. In building AxisPay now, there's been way less surprises than in other companies that I'm an investor in, or even in your own previous journeys. And it's mainly because you know exactly which fight you are getting into. And I think something you mentioned early on, and I really took it as a rule for me, is to make fintech work in complicated markets like Egypt, you better be a fintech founder with a fintech background. I put it as a personal rule. I'm looking at a pitch deck or a company, and if the founder built in food delivery or in transportation and is now starting a fintech, I'm like, okay, it is possible, but I'm going to take it with double pinch of salt just because that person didn't come from fintech.
I mean, you can still do it, but you need to appreciate that touching people's money in a market like Egypt, you don't necessarily have the safety nets. You don't have what you'll have in other more mature developed economies. It's super important. And you can gamble with someone's money, right? You're gambling with their livelihood, their kid's livelihood. So you have to give it its time and really understand how you're touching it, how you're moving it. If you come from a different industry where you build delivery, where you build anything, and I don't want to take away from it, it's equally hard to build it, but the stakes are much, much lower. If an order doesn't come to you, nothing will happen to you. But if your salary disappears or there's a bug and you can't get your money out of your card or your wallet or your account, there's consequences, right, that are actually very real in comparison to others. Right? Sometimes energy that founders have very early on and financial systems are at odds with each other. You need to be patient, and you'll have a lot of internal and external stakeholders that will want you to go faster.
Yeah. And compliance is way bigger aspect of the business than people imagine when starting.
Compliance and the fact that you don't have in markets like Egypt, all of the different solutions and products as a service. You start a fintech in Egypt, you can't use the cloud. So go figure out, do you want to build your own data center, or do you want to go and use one of the existing data center providers and you take an allocation there? Then you have to go and decide, do you build everything or do you use some of the platform providers? How does it integrate with other players? How do you think about fraud? How do you think about sanction screening? How do you think about data and your own dashboards? And all of your customers' data ultimately cannot leave Egypt. And you can't use any of the products that are really available. And this is something that not everyone understands, because today in the US, I can launch Access Pay in 6 weeks. I'll plug it into 5-6 different as a service providers, and I'll be up and running. And then it's no longer a building, it's a distribution game. So what's your ICP, how are you distributing, where are you going? And then the need becomes, you have to show, oh, I have paying customers, they're growing at these rates, because it's super easy to build. In Egypt, and in other places in Africa as well, but I know Egypt most, it's not the case. People need to be banked. You still have 60-50% unbanked. Banking or exchanging money is something that has gone back centuries. Right? So we're not inventing a new technology. We're just inventing a new way of exchanging, saving, paying, and getting paid. And it takes time. You don't have the facilities. Yeah. So the building is actually a big part of what you do before getting to the distribution.
Yeah. Can you explain how difficult is it to build a digital bank for SMEs or for consumers in Egypt? Just give us an idea about how freaking complicated it is.
It's hard on multiple parts. One is regulatory. The regulator is very accommodating. They want to support fintechs to grow, but they want them to grow in a way that's systemically good. So it's a process that you have to be patient with. You have to involve the regulator. And that's a part that's totally abstracted in other markets, where the bigger as-a-service platforms take that hassle away from you and then launch you quicker. I'm not saying that we've innovated something that's totally unique. We've looked at all the models. We've looked at different emerging markets more than your Brexes and your Revoluts, where we tend to focus more on what are people doing in India, what are people doing in LATAM, just because there's more societal similarities. And we learn and we iterate. But we never copy something and say, okay, these guys did it, so we'll do it. And that's something that frustrates me if anyone on my team comes and like, all right, X are doing this, so we'll do it. It doesn't mean if it worked there, it would work here. Then how do you distribute to them is another unique challenge. Plus, in my opinion, the hardest part is customer awareness and education. In many matured markets where you have so many fintechs that are hyper focused and specialize on a very small vertical, people already were using digital solutions. And they just had only to migrate from their Bank of America to the neobank. Here you're migrating from offline to a whole new solution. And this comes with a big opportunity, but also challenges early on, where you have to stay close to the customer, you have to handhold a little bit, and it slows you down. So these are the differences. And I think how you crack that education and awareness and building trust is the harder part. Building the product has its difficulties where you cannot just rely on open source elements, on as a service elements, but you'll get there. Then how do you crack at scale distribution and customer understanding is the most important part.
We'll get into that in a minute. Just wanted to touch on the technical side, because that's a unique bet that you made, which is it's way faster for us to plug into existing systems, but it's going to be more costly, less reliable. You've done your own calculations on unit economics. Then you just decided, you know what, I'm going to build every single thing myself. There's maybe 12 different components. Can you just briefly explain what you've built and why does it take so much time and resources to build?
So we knew that the licensing was the long lead item. We knew that if everything would go super fast, it's a 12 to 18 months process regardless. So we had these 12 to 18 months where do we build or do we outsource? We decided to really invest in our technology, and today 60% or 65% of our team are engineers. It was a big decision. We were fortunate early on in our journey to know how long it would take and to have the partners early on to also give us the resources to build that team. But then we decided we'll build our own core banking so that we can have all of our account management, all of our balances and everything on our platform with all of the KYCs and KYBs. We decided to build our own processing engine directly on the NASA switch, Meeza Digital. This allowed us to cut all of the costs in the middle and to have full interoperability on all bank accounts, mobile wallets, and ATMs.
Okay, so core banking, processing engine.
Integration layers, whether it's Fawry on cash in, cash out, and bill payments, whether it's one card for vouchers and gaming and any other future partners. We have our own integration layer that really abstracts our platform so that we can easily integrate with third parties. Okay. And all of our customer-facing applications as well. We have our business banking product and we have our consumer banking product, but we also have all of the product that no one sees in the background is everything that handles KYC, sanction screening, compliance, contract tracking, all of the settlement and recon with our partner bank. All of this is all built on our own native products as well. So that was all a heavy lift that doesn't drive customer value, but that over time drives major cost reductions in how you handle all of your financial and KYC operations in the background.
Oof, I love it. You wanted to replicate your experiment with the RCD, but then over time, market shifts and your understanding also shifts. How is Access different than RCD, and how did you build those different iterations?
So RCD was very focused on the Egyptian consumer. How can we build an Egyptian M-Pesa for the microfinance industry specifically? And we've built that, and then it was a mobile wallet helping all of your micro finance institutions digitize loan disbursements and loan collections. And then when I left and I started Access in early 2021, for us, still the idea of the consumer was super fresh in our minds, and we wanted to capture as many Egyptians as possible in a very B2B2C manner. Because you still have two challenges in Egypt we believe are the big crux of what helps any fintech products really scale quickly is how do you KYC cost effectively at scale? And how do you get money flowing into your ecosystem when people are not on bank accounts and open banking is not as big as it is in other markets? Right? So how do you get people going from cash notes into your phone without also going and having 5,000 human ATMs around Egypt? So this is what we were trying to get our head around. How do you KYC and how do you get money flowing? So we started looking at payroll, where still 50% of Egyptians get paid in cash, SMEs being 90% of private employment, and Access was meant at the very early days to start to go to businesses, tell them we'll just do payroll processing or just digitize payroll for you to capture their employees. The employees were the end goal. Yeah. The B was just a channel to the C, and the products we were building were 90% for the C and 10% for the B, just a super simplistic thing. As we got to know the B, and as we started speaking to the Bs to understand how can we digitize payroll and how can they just take our solution to get us to the C, we realized that businesses in Egypt, and SMBs specifically, have so many needs, are massively underbanked when it comes to payments, when it comes to payroll, when it comes to treasury management, when it comes to working capital, that we started shifting our focus a little bit towards the businesses, while still working on having the best-in-class employee proposition you can have, but then building for the B. And now we build 80% of our products are for the businesses. And we started by saying we'll do payroll, and now we do payroll processing for businesses. And we've learned so much over the past 4 months. And we're now adding business payments. So you can pay all of your vendors and suppliers on any bank account in Egypt that you can terminate into from the Access platform, any prepaid card in Egypt, and any mobile wallet in Egypt. So we're building that fully interoperable payment operating system for businesses to run all of their payouts and payments to us.
So you build up on this idea and you keep waiting for that approval to finally go live. And then it happens earlier this year. So now when you go live, how do you make sure that you're not pushing your own vision of reality into the market and try to distort the market with money versus actually listening to what they're saying? And how do you create your own sales or customer support structure so that those pieces of information come back to you so that you can keep an open mind and adapt?
The first thing for us is you don't give anything for free.
Okay.
You don't do offers, you don't do random discounts, because if the customers don't see value in the product, then you won't sell. It's easy for me to give you the solution for free for 6 months, for a year. You'll never know if it's actually solving a pain point for them. And the first 2-3 months were tough, just because you need to build a lot of trust. The ask is difficult. I'm telling you, hey, Kyane, you have this business. We want to help you process payroll. Give me 200, 300K into the Access business wallet to run payroll. And for them, they're like, why would we trust you? What's there that guarantees that you don't disappear with this money? So the licensing comes into place, your bank partnerships come into place, but still, human fear is important. So this is what we did. We were very pushing against offers. My sales team was trying to push. We resisted. And this allowed us to stay close to the customer. It made our sales cycles a bit longer than we'd want them to be, just because you say it once and twice and 3 times to understand. But this helped us also narrow which businesses to go to. We were very agnostic at the beginning of industries, of size, of anything. We wanted to talk to any business that would talk to us to see where our solution is resonating. Now, 4 months into launch, we have a much better understanding. Still super early days, but we understand now that we want businesses that still pay in cash, that have multiple locations, because then sending envelopes across city is costly and time wasting. Businesses with distributed workforce, meaning that I'm a facility management company, so I'm placing an employee here and here, so paying them is a hassle. I'm a security company, I'm a construction company, any company that employs people that are not sitting next to you at the office, our solution really appeals to them, right? Businesses with high turnover, because they always need to have a very simple payroll solution, very streamlined paperwork needed. The other side, banks don't really target them, so it creates a really good window of opportunity for Access. And for us, it's also a free consumer banking acquisition machine. You come, you get your Access Pay wallet, you get paid. 3 months from now, you left, you keep your wallet, someone comes in, and then you're building that consumer bank for free on top of your business banking as well.
Someone foreigner to Africa or to the region listening to this would say, this is so obvious. How come it wasn't built yet? Like SME banking should be a non-trivial question.
Because it's difficult to empathize with a business. Right? We're all consumers. And this is something we experienced here. 80% of the team wanted to do B2C. And we're excited with the consumer proposition. Most of our engineers understood consumer. Most of our product people understood consumer. The whole team. It's exciting because you're solving a pain that you ultimately are feeling. It's a different mindset to shift and think about businesses. Think about what the businesses need, what they want, how you can serve them. It's also difficult to just serve businesses only and ignore their employees. In a market where 60 or 50% of the population is unbanked, we cannot be a B2B bank and say we won't look at the consumer. So if you want to build a business banking platform or a digital bank for SMEs, you cannot ignore the consumers. And it's not straightforward and it's not easy. And people will look at you like, so where are you focused? What are you doing? You can be super focused on the two together. And it's the business, if you don't make their employees happy, they'll churn. Yeah. And if the business is not happy, you won't get the employees at the end of the day. We really don't look too much at competition. We try to focus on what we're doing. The competitor we obsess about is cash, because this is really the prevalent solution. This is where we're shifting people from. We never shifted anyone from any other products. Everyone is still super, super early. Everyone is very focused on the consumer proposition in the market. Consumer.
So when you started and you raised your first round, even the second round, you were always silent and nobody knew about you. And it gave you a position of comfort because they don't know my next move. They don't even know who I am. And I'm building and I'm focused and I have money. But now, since you made the announcement and everyone knows how much you raised and from who you raised, suddenly all eyes on you, the good ones, the bad ones. How does it feel having the ecosystem at large, having expectations? How do you live with that pressure?
We ignore it.
Okay.
We ignore it. In an ideal world, I wouldn't even be doing a podcast. Right? It's just, it doesn't matter. Everyone is just trying to justify an internal belief that they have. And at the end of the day, you can't go faster than what you need to do. So we keep the noise to a minimum, try to keep the focus on what we're doing, and do our best. At the end of the day, we don't know what's going to happen tomorrow. We're trying to stay very close to our customers. And then you'll keep on iterating on what you do. As long as you feel that you're progressing and you have enough learnings, then you're on the right track.
On market sentiment towards Egypt, it's definitely not the same when you started. The value of the GP is not the same when you started. But you're one of the few Egyptian founders where whenever you speak to you, you're still very confident and just focus on Egypt. You're not getting distracted with some potential expansions. You're like, no, my market is Egypt. The macro can be up and down, but I'm just going to stay in my line and keep building.
The market is huge. I've seen huge businesses get built in Egypt. The macros are elements outside of our control. We're not oblivious to what's happening. We understand that today we need to work twice as hard to get to the same USD revenue numbers, if not more than twice as hard. And that's what we signed up for at the beginning, to work super, super, super hard and to make this business as big as it can be and touch as many people as it can touch. Right? But if you're focusing on 80% of Egyptians, that's a super deep market that you can generate huge returns by focusing on it. And now, actually, what I'm looking at, everyone is deprioritizing Egypt. Even some Egyptian fintechs are deprioritizing Egypt, which is ridiculous to me. And it's less competitive. Yeah. So they're actually making it easier for us. And it's fine. Yeah. Expansion prematurely is a joke, in my opinion. I even find that across the different products we have within the business banking, you have to prioritize on where you as a founder put your focus on. So imagine having multiple markets. Where do you focus on? Over time, over 10, 15 years, we want to be all over Africa. But that means that Egypt is so mature that I'm spending my time on our next market and then the third and then the fourth. And then it's just you keep on doing these 0 to 1s across multiple locations. But today, Egypt is so big. It's such a big population. It's such a big economy. SMEs are the heart of the economy and of employment and GDP. And FX is FX, right? Yeah. We have a lot of resources. We have a lot of industries. So for me, I'm super, super optimistic. It's harder to convince everyone, but for us, we do what we have to do and the rest is out of our control.
Maybe last question in the context of access before we talk about Egypt in general. What's your prediction for any of the major Egyptian banks launching a usable SME banking product?
The regulator is very focused on SMEs. For over 5-6 years now, they have a mandate where 25% of commercial banks' books need to go to SMEs. And many banks are still failing to meet that quotas and are paying penalties on it. It's not that they're ignoring it, they're trying to do it, but it's a different mindset. The business banking ecosystem, as we see it, you have your really micro entrepreneurs being served with the microfinance institutions. Mm-hmm. You have your big blue chip companies being served by commercial banks. And then you have the middle market where Some banks are trying to understand how to serve SMEs into different proposition, but it's a different muscle. You need different data or lack of data. They have documents, but not the same structure. There's a bigger human element that you need to understand also. It's a huge market. There's 4 million SMEs. Over time, fintechs and commercial banks will partner and work together. It's not fintechs versus banks. It's fintechs and banks in the Egyptian context, where banks can provide balance sheets to fintechs who can then own the customer, own the relationship, and really support the banks in a different way. So everyone will try. I think it's on us to keep our product 1, 2, 3 years ahead of any competitor, keeping that agility, keeping that speed, that no matter what you do in a bank will be slower, and to stay ahead of the curve.
Excited to see you continue obsessing about this issue. One thing I like about you, you once shared that you're really not in a hurry. You're here. You're not looking to do a quick success and go somewhere else. I'm living here. I'm building a legacy. It's going to take whatever it's going to take. I'm not hungry for an exit. And I think that's the advantage of having an early exit. I'm fine. I can survive, which gives you a lot of patience. Kudos to that. Curious about your read on fintech in Egypt. Would you say there's been different phases with Fawry, the Meeza cards, and this wave of overfunded fintechs? Do you think there are way too many fintechs today in Egypt?
I'll take the evolution of digital payments, and it started with Fawry building that payments 1.0 in Egypt. They played a big pivotal role in opening the doors and setting up the foundations for companies like Access, because they came as a new brand and giving the confidence to people where you no longer have to go to Vodafone or to Orange to pay a bill. You can pay it at this yellow branded logo and it goes through. But it was still and still is for the big part the cash economy player, where you go to a kiosk and pay in cash. But this has built the foundation where now what we need to do is to take people to the next step and saying, your salary is on your phone, you don't have to go to that kiosk, and you can also pay your bill. And that has helped a lot. Then you had the telco wallets start in 2016, 2017, launching mobile wallets to the market. It was super slow. When I started my entrepreneurial journey in 2017, people didn't really know what wallets were. Uptake was minimal. 2018, you had the whole volume was 9 billion pounds for mobile money in Egypt. And now, today, in June 2023, the monthly volume is 100 billion. Right? So you can see how you went from 9 billion to 1.2 trillion annualized in 2023. And a big part of it is due to COVID, where you had 80% of Egyptian without a bank account and needing to move money. And then people started adopting mobile money like crazy. When we launched the CD in late 2020, still early days COVID, people were cashing out 95% of their amount coming on their wallet. And no one was transacting at all. Then I stopped seeing data until 2-3 months ago. And now I'm shocked by the amount of P2Ps, bill payments, top-ups, peer-to-merchant payments that you see, where velocity is so high, but yet mobile wallets stay a bit in the shadows because you don't have a big brand that's aspirational where people can be proud of having this wallet. Yeah. Everyone is using VodafoneCash in the shadows, right? Not really proud of it, not saying, oh, I have this product, but it's touching a lot of people. And it's a product that's increasing and growing much faster than bank accounts and much faster than prepaid cards. Then you had COVID in 2020, 2021. People discovered the opportunity that we saw in 2017, 2018. Like, people were laughing at, like, what are you doing? VodafoneCash will eat you alive. And now you have all of these fintechs suddenly with millions and millions of dollars throwing it to consumers in offers and discounts.
They're mainly card-led.
That's mainly card-led. And that doesn't move the needle. It's a copy-paste of a playbook that I don't see necessarily as the priority need. You do have a segment that do need these cards, for sure. But not 80% of the population, where still the market is getting built. So I was looking and I was like, everyone is building a fintech product. How many do we need? And to do what? And how are you going to digitize the source of money into these accounts? And you have to think about it. Because people are still getting paid in cash. People are receiving loans in cash. And people are receiving remittances in cash. So unless you're lending on that card, processing payroll on that card, or processing remittances on that card, I don't see necessarily the entry point for it.
One last piece in this fintech landscape that almost nobody talks about: remittance. In Nigeria, there's maybe 12 different apps that you can send money from the UK or Canada back to Nigeria. Where are all the remittance players and category in Egyptian fintech?
We actually are looking at it because Egypt is the 5th biggest market globally in remittances, okay, in a very dense population. Last year, India got 83 billion, if my numbers are correct, over a very big surface area. Egypt got 30 billion over a very densely populated.
And that GCC countries?
That's across the world. GCC countries, US and Canada and Europe. So you have 8 big markets that drive 80% of these 30 billion into Egypt. and still you don't have a lot of solutions. The two main problems are around AML, and this is where we're still trying to understand and work with the regulator on it, is how do you do an instant check on the sender and the recipient, and how can you make sure that there's no AML issues, there's no anti-terrorism issues, etc. So this is the bottleneck that everyone is trying to figure out and work on, but over the next 2 to 3 years, I imagine it will be a huge opportunity to work with all of the remittances providers to then help any Egyptian living abroad sending money home.
If you had your close best friends who are building something in fintech, or even if you had to write angel checks to 3 founders, what would you advise you to go? What are the current gaps where there is a real opportunity?
I mean, anything fintechs, at the end of the day, we want to look at and we want to understand and we want to do it. I think where there's a huge opportunity is around data and then credit scoring, because you don't have always the data in Egypt. You have it spread across different areas. How do you synthesize different documents? How do you understand? How do you capture and digitize and build the product around all of the behaviors you'll see? Is something that doesn't exist. Right? Today, lending is a huge opportunity in Egypt just because of how underbanked, and the Egyptian is a net borrower, not a net saver still. Then how can you do this at scale? You've seen all of the big businesses rely on human investigations, credit assessment. So really then abstracting this for businesses, for consumers, and building these credit models and credit engines will be key, and also all of the data that goes with it. Because not just Access, but all of the fintechs that are working with businesses, consumers of any sort, we're all helping our counterparties build credit histories that didn't exist before. Before, if I'm buying this in cash, if I'm paying rent in cash, it's gone, no one knows. But now as you start digitizing payments, you can help people get fair access to credit at much, much lower rates if you can then capture all of these data pools somehow and sum them together. That allows all different banks, fintechs, whichever institution, be able to rely on that data to underwrite at lower rates.
Just to wrap up, what's keeping you excited? What's coming in the pipeline? Something you're looking forward to that's going to happen in the short term?
We're very focused on the go-to-market. We're working on a few enterprise customers that we're really excited about. And then we have a few launches coming in Q1. So that's really just getting our marketing activities into place, launching these big customers will create the trust and the inertia to keep us going into 2024.
Super pumped. It's go time. Thanks, Jacques. I appreciate it.
Thank you.